Hi everyone. Today let's talk about the port strike. Then we'll take a look at the charts as usual, and we did get a bit of an everything sale here today. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So the port strike has started and it is reigniting fears around inflation as well as larger economic impacts, and all of those depend on how long this lasts. So this is going to affect the whole economy really. It's on the East Coast and the Gulf Coast, but it's going to challenge things like coal, energy, agriculture. But there are some potential buffers, so let's go ahead and talk about those as well. And it seems a lot of this is centered around automation, at least here for the short term, protecting jobs. They are paid quite well, so I don't think it's really around the pay necessarily, but it is around job security to some extent. And like I mentioned, the fear is around inflation. This could stoke prices to go higher for food, autos, and other consumer goods, but it is only expected to have modest impacts beyond those, and hopefully it doesn't drag on for too long. Of course, there will be effects across the whole economy, things like trucks to toys to artificial Christmas trees. All of those things are going to be affected, but not in a huge way. And they say here it's supposed to affect about 0.1% of GDP, which is a small percentage, but GDP is huge. That's about $4.3 billion lost on imports and exports per week. So that is a lot of money, and you have to start to weigh the effects of that versus going with whatever their demands are. They say trajectory for growth is 3%, and they don't expect this to derail that potential for growth. And we've been seeing that in the Atlanta Fed GDP numbers tracking 2.5 for third quarter. And then talking some of those buffers here, we have the West Coast ports that are expected to take on some of this freight. Obviously, that's a major divergence from the East Coast to get all the way to the West Coast, but some of these companies can work around it. And they also had been anticipating a stoppage and stockpiling ahead of time, which also damages the cause. And you do have some of these financial companies like Capital Economics saying they think that the economic impacts of this are a little bit overdone, but markets didn't think so today. It could be just a potential for right place, right time, as this is the catalyst. But with a White House that is very pro-union, they could be absolutely supporting this cause. And like I said before, I think the biggest threat is the inflation threat. If that comes back up, then maybe we don't see the same kind of cuts that we are expecting for the rest of the year. I don't think it's going to be that big, but definitely something to consider there. And that obviously would have major economic impacts if we didn't get the 50 basis points worth of cuts the rest of the year. Looking at fear and greed, even with the step down today where we were only at a 69 from a 75, we did hit extreme greed just for a moment yesterday, and now we're seeing a pretty sharp decline down to that 69 level. So key resistance there at that 75 number. Momentum stepping back into greed. Breadth and strength still hovering in extreme greed. Put call ratio still in extreme greed at the 0.66. Waiting to see that start to elevate here. And then VIX. We talked about it. We got the higher low setup. Got the explosion here today. Take a look at that later on the charts, but it was up into the 1950 area. And then safe haven demand. Big jump into extreme greed. And then junk bonds stepping down into extreme fear as people are still nervous about the economy, in my opinion. Moving over to seasonality, we said this was supposed to be the start of a bearish period, and sure enough it was. On average, it was about a 0.5% negative. Sure enough, we did end up getting that. Tomorrow is supposed to be more negative all the way here up until the 9th or 10th, so bearish seasonality seems to be coming to fruition. Moving over to the economic calendar here for the first CPI for the Eurozone in line with expectations. Month over month headline number actually came in at -0.1, so that's a good number there. Economic factors not good at all. You can see all of those were negative. Jolts did come in pretty good, which potentially led to part of that down move. Good jobs numbers means that we might not get the same cuts that we were looking for. Atlanta Fed GDP came in at 2.5, just like we talked about, worse than expected, worse than that 3.1. And then looking at Wednesday here, you can see ADP non-farms, the big one for the day, really nothing else. You do get the unemployment rate for the Eurozone, fairly interesting. And then for Thursday, we start to get a little bit more economic data, global services PMI, non-manufacturing PMI, non-manufacturing prices, as well as the Fed balance sheet. And then looking at max pain, you can see it's still around that 569 area, which is exactly where price went to, 568.66. So we'll see if markets dip a little bit lower, maybe come back to the zone. Max pain by expiry here, you can see we are above just about nearly every expiry here for a while. Obviously, that doesn't mean a whole lot in the short term, but you can see here, with the dip that we saw today, max pain for tomorrow and the next day is a little bit of a positive move, even up until the Thursday here. And then for Friday, just a very slight move, basically flat like we talked about. So we'll see if that comes to fruition. Slight push to the upside here tomorrow, and then a little bit of a fall into the Friday session. Moving over to the charts here, starting off with the S&Ps, you can see we did get that second push here after this first push, but now we're starting to see that first bearish price action. Very similar to what we saw here, actually. The 28th of August was basically this candle. Big dip down, found the first support, saw bullishness the next 2 days, and then after that we saw that pullback there. So we're early in this kind of consolidation. Could see another day or two of up move, but still thinking that this is going to be your second high, and then we're going to pull back into this lower structure here. Go ahead and extend out that trend line here, and that gives you a price target of down around the 552, 553 area, right around that 55 EMA at 552.80. So current support 565.16. As long as that holds, you're probably in good shape. We're falling a little bit after hours, about $1 after hours. So another thing to consider. And then you got the 21 sitting there, 561.30. Still think this could see just a day or two of bounce, and then we're probably going to get that bigger move down just like we did here. So see how it plays. Momentum rolling to the bear side. RSI, big breakdown here, big push through that SMA. So also another bearish indicator. And then looking at it on the short time frames, you can see two big bear candles starting off the day all the way down to 566. Ended up catching a bounce from there. A couple of bull candles after that hit resistance at the highly traded zone and the 144 EMA, which was at 570.45. And then we're getting more selling after hours. Momentum bearish, RSI bearish. Seems like this is going to continue lower. And like I said, 565.16 is that first price target. So about $2.50 of downside, or 0.5% into that first support. If that breaks, then my next level is here down at 560. So something to watch for, looking for a break there, and then another 1% down move to the next level. And then moving over here to the Tasty charts, you can see we did flip back into bearish conditions. The first time we've been in bearish conditions for a little while here, and you can see it. First candle of the day, took out the ATR trailing stop, which was at 468.45, took that out, held that 55 EMA on the 4-hour, tested it a couple times, and now we're falling there after hours. Next support is the 89 at 465.16, and then that lowest ATR band, which I would guess that we're going to touch at least once, is sitting all the way down at 464.16. So right in the zone here, and then below that you do have the 144 EMA sitting at 561.30, right in that zone. So volume spiking on those candles, not great to see that. Interesting to see big volume on the up candle and then immediately followed by big volume to the downside. So bit of a head fake yesterday. Thought we might see a little bit continuation, but it didn't work out that way, and now it looks like we're going to see more selling. Current ATR trailing stop is all the way up at 578.87. Moving over to the NASDAQ here, you can see similar thesis. Took out the trend line here and fell some more. Again, got very low, started to hit these levels here. Still looking for a bit of a gap fill potential there, but momentum rolling down, RSI rolling down. Makes sense that it's going to push to that 21 EMA at 19,450. Then looking at that here on the Qs, same thesis. We're still in this rising wedge, upward trend here, but 21 EMA is your support at 473.60. Tested my level almost to the penny. Again, it's important to have these on your charts. 477.69 was the level. Touched that, caught a bit of a bounce. Still below my 481.94 level, so it's still a bearish thesis down to that 477 once again. And just like the SPY, we're still selling off here about $1 after hours. Still looking for a push to 477. And then we'll see that 21 EMA, see if that holds some support in the 473.68 area. You also have that highly traded zone in here around 475.20. So we'll look to see how it plays, but right now definitely looks a little bit more like this, and looking for that retest of the trend line down here, which is currently down around that 464.50 area. Moving over to the Qs, same thesis really as the SPY. You can see downward trending. Didn't have the same up pop that we saw yesterday on the SPY, but big down candle here, hit that lowest ATR band at 579.16. Caught a little bit of a bounce off the 55 EMA, but we're still selling after hours. Looks pretty bad. Lowest ATR band would be your price target, 476.67. Then you got the 144 EMA sitting right there, 476.11. Again, big volume. Didn't see the same pop like we said on the SPY, so no big up move yesterday, and then same down move here, continuing lower. Gonna hit that price target in my opinion. Bearish conditions. Current ATR trailing stop is at 493.82, and everything looks pretty bearish here going into tomorrow's session. Moving over to the Russell and the Dow, you can see the Russell was down 1.36%. Not actually too terrible, $3 on the day. Did take out my level there at 218.13. Almost tested this next support, hit VWAP. That was at 216.66. 21 was sitting there at 216.18. Low of day was 216.30, so just barely missed that zone. Talked about this cluster being important, momentum, bearish, RSI breaking down here now. The trend is still up, but the RSI is bearish, volume coming in there, so definitely not great. Need this trend to hold at 216.22. If it doesn't, we're probably headed back down to the 144. All the way down at 207 or another $10 lower from here. So critical zone, waiting to see what happens right there. Definitely watching it closely. And then looking at the Dow, basically flat compared to everything else. 0.38, held the trend, falling after hours, about $1. Current support for 1838, but that trend breaking is going to be interesting if we get that continuation tomorrow. And then below that, 21 EMA, 415.78. Moving over to SOFI, we've been watching this for a couple of days here. We thought we were going to get a bounce off this trend, and then we highlighted it yesterday as a retest of the SMA on the ATR. On the RSI, did not look good, and now we got the break here today. Again, could have been an everything sale, and that's part of why. Looking at the 200 there at 755, need that zone to hold. Otherwise, we're probably headed much, much lower to this previous low, down around the $7 mark. So this is a pretty choppy stock. I didn't think we were just going to continue to just march up here indefinitely, but thought we might get one more push out of it. Guess it didn't quite work out that way. Still might. 200 sitting there. Moving over to the Mag 7, basically did what everything else did, 1% lower. Again, tagging that 283.46 level. High of day was 283.46 to the penny, so we touched it right there. Momentum rolling down, just like we've been talking about. Consolidation top, looks like it's going to do it. RSI broke just barely below the SMA. I think that's going to go lower as well. Next level, 273.41. Below that, you got the 21 in VWAP sitting in there at 269.01. Again, I would expect that first level to break. Test the 21, we'll see what happens after that. Moving over to Apple and Microsoft. Apple did a big flip here. So we saw the big breakout yesterday, 2% up, over 2%, but now we got the big island reversal. So yesterday it was a gap up and rally, and then a huge gap down below yesterday's candle, and then continued selling back down to support at 224.36. Didn't really see any volume, a little bit of a spike up to 63 million, definitely some selling coming in. But right now we held support. 21 EMA was in there at 223.87, my level 224.36. Could be a zone of support. We've been here quite a few times. I thought we were going to get the continuation after the big breakout yesterday. Didn't work out that way. So see how it plays. Took out the trend, found some support. If it breaks that tomorrow, probably headed back down to the 217.62 area. And then looking at Microsoft, this did exactly what we thought it was going to do. I added this structure here recently. Big move down, bull flag, push up, hit resistance here, establish this trend line, found resistance again, more selling here today, 2.23%. Think this is going to continue at least to that 200 down at 415.90, or about another 1% move down. My level is 413.36. Momentum bearish, RSI bearish. Think this is probably going to break down further. You could say maybe the lows from here is around 401.50, somewhere in there. But realistically, I think it might push through here fairly quickly back down to the 394.22 area. Back down to this trend in here makes sense to me. So Microsoft looking quite awful, and I think there's more bearishness to come. Moving over to Tesla and NVIDIA. Tesla was down 1.38%. I think we probably hit that second price target, and we're probably done here now. 264.68 was the level. That was right at these previous highs from mid-July, and now we've touched it, and now it looks like we're going to sell here. Big hanging man candle. 255.44 was the level. Tested it, found support, but right now I think it's going to sell. Momentum bearish, RSI. Still hanging out above the SMA. Still could find some support down at the 21. That's at 236.22, but either way, I think we're going to see at least a little bit of short-term selling. Then looking at NVIDIA, same thing here, 3.66%. Gap down, found the trend. Again, rejected from the trend, more selling. Looks like a breakdown, retest, breakdown, makes sense. 21 EMA sitting in there as support at 115.4. And that 144 EMA down at 107.57. So critical zone there. Momentum bearish, RSI bearish. You can see big breakdown. Think that's headed much, much lower. And if this zone breaks here, then probably back to these most recent lows. And that would be another series of high, lower high, lower high, lower high. Still in this consolidation with higher lows. But if that structure breaks and we start to see lower lows, I think we could see a break of structure on NVIDIA, which would be terrible for markets. This has been one of the stocks that's been holding us up, and it seems like it might see a change in structure here over the next couple of days to the next couple of weeks potentially. Moving over to Amazon and Google, Amazon fell with everything else, found support at the highly traded zone, found support at the 21 EMA at 484.88. Right in here, tested that zone yesterday, held there today, momentum bearish, RSI bearish. Support for me still 181.41, so looking for a test of that. Still have a consolidation of EMAs and SMAs right in here as well. 55 EMA sitting at 179.76. And then as long as that 200 holds, this is technically a bullish structure, but I think we're probably going to see at least a test of that 176.47. We'll see how it plays. Continues to sell. That is 5 days in a row of bearishness. So seems like it's going to continue. And then look at Google. Talked about this one yesterday as a breakout. Big move up $1, 1.15%. Continuation here, even though everything was bearish. Momentum's bullish. RSI is bullish. Looking for that 170.95 level. I think that's going to continue right to here. And then we'll see if it breaks above that. It's going to have to hold up despite the falling markets, in my opinion. But if it can do it, I think there's some more room to the upside here on Alphabet, despite the fact that everything else is falling. Moving over to staples and discretionary. Staples hanging in there, 0.34. Still holding support at 82.53. Tested it once again here today. Momentum bearish, RSI bearish. Big selling on the volume, so it's probably going to break to the downside at some point, but still hasn't done it. And then looking at discretionary, hanging man candle there. We expected resistance here. Sure enough, we got it. Hit the price target. Think we're going to sell some more. Tested the level 197.14. Found some support there in the 9 EMA, but I think this is going to continue lower here. Eventually touched 193.81 and then the 21 EMA in there, 193.14. Moving over to oil and gas, big push up there today, 1.68%. And then looking at transports, we talked about this, finding resistance here at 69.92. Found support at 67.85. I think it's going to break back below there. Momentum bearish, RSI bearish. So makes sense. Oil and gas pushing up with the geopolitical risk we saw today. Big volume, big momentum. Probably some follow through on that. Looking for the break of 135. Looking for that 55 EMA test at 136.76. And I think we'll see it. Big candle up today. Think there will be some continuation there while transports continue to roll to the downside. Moving over to Breadth. Surprisingly, Breadth did not look as terrible as I would have guessed. 20-day Breadth basically flat here. Down 6% or so right to the level. Tested that there at 68.14. Caught a little bit of a bounce from there. Momentum still bearish. RSI right on the SMA, which is trending higher. So could find a bounce from there, still in this same consolidation we've been in. No real changes there. Looking at 50-day Breadth, quite a bit of a difference though. 8.6% down, big step to bearish momentum. RSI breaking down, so that's much more concerning here. We have the big gap up, test, gap down, consolidation. 21 EMA as support at 72.02. And I think we're probably going to fall back down to the trend around 70 or 68.66. So definitely a little bit more bearishness to come in my opinion, which makes more sense. And once this starts to roll, the 20 day is going to go with it. Not super common to see that 50-day kind of leading here to the downside, but I do think that that is going to break, and I think the 20 will go with it. Moving over to the dollar finally caught a little bit more of an up move. We've been talking about this as a consolidation low, and you can see it here. RSI retested, got the continuation up, big up candle, 0.45. Again, some geopolitical risk accelerating that, but we're to the level 101.25. Want to see that break here up to 102. The dollar continues to look bullish. I think there's some more upside to it. 55 EMA sitting there at 102.16. And you can see here on the hourly up to that level test. Definitely found a little bit of a rejection from it. Momentum slightly bearish. Might see a higher low setup and then continuation, but I think it's going to go. This is a first push in my opinion, and I think we'll probably see at least 2 more. Moving over to bonds, as you would expect, J&K taking a big hit from that big everything sell today. Gap down and dojied 0.58 right at the level, 21 EMA, 97.11. Low of day was 97.12, so missed it by a penny. VWAP also there, 97.11. So see if it holds that area. Probably not. Momentum bearish, RSI bearish. Big volume on the day as well. And then looking at TLT, tried to go a little higher, ended up holding a 0.4 gain, still holding this trend line here. Hit the 21 EMA, found a little bit of resistance, but look at this momentum, starting to find some strength, volume coming in. This is a safe haven, and I think people are going to start to push back into bonds on the government bond side, not so much in the high yield bonds. Moving over to the VIX, I think this has some more in it. 15.25% momentum bullish. We've been seeing that step to bullish. Got the continuation here. RSI pushing up again. We've been patient with this, but I think it's going to go a little bit more. 2250 is where I would put it. Hit some of these trends here, which are still acting as resistance, but 2250 is where I think we're going. Back to these previous highs, potentially even higher. We'll see how it plays. Not super common to see these massive spikes. I don't think we're going to see that, but I do think that there's a little bit more in it over the next day or two. Moving over to my accounts, I did okay. Obviously, it was a down day and everything sell day, except for the XOP, which did fine. Obviously, made some money there. In terms of positions, IWM sold the 217s for today, and then I made some money on those as the market continued to fall, and then rolled those out to tomorrow's session for $1.68 while that was in the money. Still in the money a little bit, still trying to hang in there. Again, watching those critical levels. If they break down, I'll definitely take this position off. And then looking at the Qs, same thing here, down $8.30, continuing to fall a little bit after hours. As long as I lost about half of that money, so not bad. $6.38 there. And then I took off the shares and put on some puts here to get back in around 477. If it breaks down, I'll continue to roll this out and collect money on the call side. And then we'll see how it plays over the next couple days. Like I said, I think there's a little bit more bearishness to go, so I can continue to play these puts to the downside and roll out and down as we go. And then once we start to stabilize, I can hold those puts until they expire worthless. So that's the play right now. Holding calls, making some money on those while playing defense on the put side. And basically the same thing here on the IWM, unless they break those key resistance levels that we talked about. Let me know down in the comment section what you think of the strike. How much of an impact is it going to have? And how long do you think it will last? Is it going to be weeks, days, months? Definitely could have a huge impact if it lasts that long. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.